All right. Today is, what is it? Wednesday, October 6th. This is a recap for the stock market activities today. In focus tonight, we're going to talk about the roller coaster ride that we got in the market today. See, a lot of you ask me, or shall we say comment, and say that this is so entertaining. You make the stock market and economic and financial news so entertaining. And I say, you know what? The whole thing is a freak show. It's like a dark comedy, and it is the best show in the planet. I'm not talking about my channel, by the way. I'm talking about the stock market and the state of our economy. It's a dark comedy, and you're not going to get that kind of action at all, not even from Netflix. This is the best show on the planet, and therefore it's so easy to make it entertaining because it is the most entertaining show on the planet right now, the biggest freak show ever. And today was the best example for that. But let's back up here for a minute and discuss my conditions for a market bottom. Number one, a top in the US dollar. We're not talking about a crash, by the way. We're talking about cooling off, peaking in the rally. Likewise, a top in yields, specifically the 10-year yield, and then climbing the wall of worry. And boy, today we did a lot of climbing. So let's start with this. The wall of worry. And the number one concern is tapering and tightening of the monetary policy, aka the cocaine out of the Fed. The tapering of the cocaine operation has two scopes to consider. Number one, inflation. Number two, employment. When we talk about inflation, the poster boy and the center of the inflation crisis right now is natural gas. And overnight, the futures were down big. We're talking about the stock market futures. The Dow Jones, the NASDAQ were down big. It was bear porn overnight. Matter of fact, there was a brief shortage of Kleenex among the bear community. And the reason is natural gas prices exploded higher overnight. Matter of fact, natural gas prices over at the UK were up almost 40% in a single day. But then, when trading opened here in the United States, the market did 180 and it started to rally higher. And natural gas prices crashed. Why? Here's the answer. You can thank your boy Vlad. We're talking about Russian President Vladimir Putin. Because there was a lot of pain in Europe. And the Europeans started to scream and yell, gas prices are rising higher, what are we going to do? And of course, Vlad came to the rescue. He said, "You're short gas. I get it." And immediately, natural gas prices crashed and the market started to recover. Why? Because the inflation in natural gas prices was getting us closer and closer and closer to reducing the amount of coke that flows from the Fed to the market. If natural gas prices continue to rise higher and higher and higher, tapering will not do the job alone. And the Fed will have to go ahead and start raising interest rates abruptly. We're getting more central banks across the world hiking up rates abruptly. For example, today the Polish Central Bank and the New Zealand Central Bank, both of them raised rates higher, unexpectedly, by the way. And therefore, when Vlad did the job, he cooled off inflation expectations, and therefore our worries that perhaps the coke will stop flowing into the market abruptly, those concerns are alleviated for now. Keyword, for now. And of course, yesterday I tweeted, because I tweet sometimes, and I tweeted that I'm shorting the XOP, which is the energy ETF. I said the rally will pause here. And what do you know? Crude oil prices were down today, and the XOP was also down with them. So this was an excellent trade. And I know some of you followed me in this trade and you made money. So tonight you're eating steak and lobster, right? But don't forget about your uncle, the Maverick of Wall Street, who gave you the tip to begin with. Now it's your turn to return the favor, right? $20, baby. $20 for the tip. Because who else? Do you have another YouTuber who puts money in your pocket? Of course, if you turn a blind eye, the last 6 losing trades that I shared with you. But anyways, I know what you're going to say. But bro, you have some insider information. I'm going to call Gary Gensler because you knew that Vladimir Putin will increase the supply of natural gas. And I say, you know what? You can call Gary Gensler all you want. The man is in a coma. And by the way, you're right. I did talk to Vlad last night, but we did not talk about natural gas at all. He just wanted to talk about hookers. You know, Sochi hookers versus Moscow hookers. Needless to say, the conversation was intriguing, but no insider information were exchanged. whatsoever. Matter of fact, my thesis was technical in nature because, as you can see, the XOP has a bear flag followed by another bear flag. So we could see another drop down in the XOP tomorrow. But remember, this is a pause, not a crash. Likewise, the writing was in the wall. When you look at the daily chart for the XOP, the RSI indicator was extremely overbought, meaning that any bad news will flush the chart down. And this is true for any chart. Overbought charts, any bad news will flush the chart down. On the other hand, oversold charts, any good news will blast the chart higher due to short covering. Perhaps as we're seeing in the broader market right now. Why? Because we got some good news when it comes to the debt crisis and climbing the wall of worry. But let's not get ahead of ourselves here, because it wasn't just Vlad who crashed energy stocks and energy prices today. Matter of fact, we got the data for crude oil inventories, and they came out way exceeding expectations, crushing the expectations, which were for around 400,000, but we got 2.3 million. And therefore, this was another whammy against energy prices. We have a double whammy now, Vlad and the inventories. But here comes the third whammy. We got the news from the Secretary of Energy, Jennifer Granholm, who said perhaps the government will start releasing some oil from the strategic reserve. So now we have triple whammies against energy prices and energy stocks. Yet the resiliency in the rally in oil is extremely notable because oil prices and energy stocks closed well above the lows of the day. That tells me that perhaps the rally in energy is not over. We can have a pause, but the rally will resume once again. Now, we talked about inflation. What about employment? Because, remember, getting inflation under control is good news when it comes to tapering, because when inflation expectations go down, say natural gas prices topping and crashing, then we will have a less aggressive tapering, shall we say. But there's another side to this, which is employment. And when it comes to employment, good news is bad news for the market, and bad news is good news for the market. Why? Because bad employment numbers to continue in its cocaine operation. But good employment numbers are bad for the market because it lessened the need for cocaine. In the morning, we got the ADP report for private payrolls in the economy. And here are the facts. The private sector of the economy created 568,000 jobs, beating expectations. Is this good news or is this bad news? The answer is it is good news. Good news economically, which means bad news for the market, aka the casino. Small businesses created about 63,000 jobs. Mid-sized businesses created about 115,000 jobs. Meanwhile, large businesses created 390,000 jobs. The goods producing sector of the economy created about 102,000 jobs. Good numbers here. 7,000 jobs in natural resources and mining, 49,000 jobs in manufacturing, and 46,000 jobs in construction. Meanwhile, the services sector of the economy created 466,000 jobs, most notably 226,000 jobs in leisure and hospitality. What does that mean? It means that the impact from the D was minimal. As you can see, we had a drop in July, another drop in August, yet mind you, the private sector of the economy was still creating jobs, net positive, but the pace of jobs creation took a hit due to the D, the rise of the D. But now, as the D disappears, the economy is starting to recover once again, and we're creating jobs. This is good news, and this lessens the need for the cocaine from the Fed. And we know that the market is a cocaine addict, and therefore the market was debating, should it rally higher based on the fact that inflation expectations will be suppressed, at least for now, due to the drop in natural gas prices, or should it be concerned that we're making progress here in employment and we're getting closer to the substantial further progress bullshit from the Fed? If the ADP report is a leading indicator, then the upcoming payroll report from the BLS on Friday will also come out hot, and if it does, then we have a confirmation of tapering. So once again, the cooks over at the BLS will have a difficult job, a tough one, to service a cold number, a weak number. And obviously, the market decided to rally higher. The market decided to choose the fact that inflation expectation is down for now due to the drop in natural gas prices and other factors when we talk about climbing the wall of worry. For example, the next item is China. We have concerns regarding China, and we continue to get bad news after bad news after bad news, from the Evergrande crisis to the tensions with Taiwan. Matter of fact, here is the CCP's mouthpiece, who pretty much said that China could engage in a sudden war against Taiwan, a sudden invasion of Taiwan. He says, why do we have to wait till 2025? Indicating that perhaps China is about to invade Taiwan. This is bad news, very worrisome news. But the market so far has been shaking this one off. However, we also got good news on the China front. After the market closed, we got the news that perhaps we have a meeting between President Biden and Chinese President Xi Jinping, which will be held virtually. Regardless, it is good news. It is progress. Perhaps we can come up with a trade deal. Perhaps we can soothe the anger and the tensions between China and Taiwan. And therefore, we did some climbing here. We're climbing the wall of worry. What about the debt crisis? Heading into the day, we had a lot of bad news regarding the debt crisis. Everybody was thinking, you know what? Every cycle we have the government, Republicans, Democrats fighting. It's a show. It's a circus. It's a soap opera, and when the 11th hour comes, they make a deal anyways. Always. The United States of America never defaulted on its debt. Never. And therefore, the market was skeptical. But we're now in October. We have until October 18th, according to Janet Yellen, before the entire country runs out of cash. And of course, when she says we're going to run out of cash, I always think about Neil Kashkari, because Neil said we have infinite amount of cash at the Fed. How come we're not using the infinite amount of cash? But anyhow, the news was extremely bad heading into the day. For example, Janet Yellen said last night that she rejects the $1 trillion coin as a gimmick. Today, she flip-flopped and she said perhaps we can use the $1 trillion coin. Janet Yellen also warned that a breach in the debt ceiling will be catastrophic and it could trigger a recession. Likewise, even Barclays were warning investors to be prepared for the dire scenario. The U.S. will default on its debt. Joe Biden yesterday came out and said that perhaps he will use the nuclear option in his standoff against McConnell. However, here comes the good news. You know why? Because the stock market was down. They play this game until their portfolios get hit, and then all of a sudden the call to action takes place. Whoops, our stock portfolios are down. Let's get to work right away. We heard from West Virginia Senator Manchin in the morning, and Manchin said the U.S. will not default. And right away, again, the market was building on the gains from the Vladimir Putin optimism and the rise in crude oil inventories. So the remarks from Manchin was a cherry on top for a market that was already poised to rally. On top of that, we got the whipped cream from Mitch McConnell, who issued a statement indicating that he could carve a deal, giving the Democrats more time to come up with a proposal. The problem with Mitch is, every time he uploads something, he uploads it in low resolution. We spend millions of taxpayer money on this guy alone, between his salaries, between his airplane tickets, first class, his security, his staff, but somehow he uploads low-resolution pictures all the time. Matter of fact, here's one of his tweets saying that he is hanging out with his buddy Joe Biden, and this is the picture that we got. But we got a hiccup along the way from Senator Hirono, a Democratic senator, who said no thanks to McConnell. However, we did not let that bad news ruin our day. The market dismissed that because Joe Biden and Janet Yellen held a meeting with corporate executives who spread some FUD. What will happen if the U.S. defaults on its debt? And these executives, ranging from the chief of the NASDAQ, warning about the market, the disruption in the market. Wow! The market is down 5% from the top, and they're talking about disruption in the market, and a market crash, an emergency. But we need to rescue the market for the health of the economy. We're only down 5%, you fools. And of course, among the attendees was JP Morgan boss, Jamie Dimon. President Biden, I don't know if you caught that, but he slipped, and he called Jamie Dimon his buddy, and he said, Jamie. Then, whoa. The cameras are here. Mr. Dimon, CEO of JP Morgan, who I don't know, by the way, and I assure you, I have zero connections with JP Morgan CEO Jamie Dimon. You know, my buddy.
I see old buddy Jamie Dimon up there at JP Morgan. Jamie, excuse me for calling you Jamie, Mr. CEO, it's good to see you.
Here's your buddy Joe, just in case you were not aware. JP Morgan is the top criminal organization in America, and Jamie Dimon is the top gangster in the United States of America right now. I'm going to read some headlines for you, for his buddy Jamie. I'd love to see your facial reaction as I'm reading these headlines. Inside the JP Morgan trading desk, the U.S. called the crime ring. The U.S. says the precious metals desk at JP Morgan was a racketeering operation. Now the bank is poised to pay a record penalty for spoofing. Matter of fact, the Justice Department issued a fine for JP Morgan, a slap on the wrist worth $920 million for the crimes of JP Morgan, the crimes they committed by manipulating and defrauding the precious metals and treasuries markets. JP Morgan staff said a $1.1 billion deal might be corrupt. The bank sent the money anyway. This is for a deal in Nigeria. Exclusive. JP Morgan faces oil bribery probe in Brazil. 3-count felon JP Morgan Chase caught laundering more dirty money. Of course, we call JP Morgan the laundromat because their expertise is washing money. Global banks defy U.S. crackdowns by serving oligarchs, criminals, and terrorists. This is according to the FinCEN files, which caught JP Morgan washing money for gangsters, criminals, oligarchs, and terrorists to the tune of over $500 billion. This is your buddy, Joe. JP Morgan Chase is done with private prisons. Yep. Private prisons. U.S. charges ex-JP Morgan Chase executive with alleged market manipulation. Again, is this a bank or is this a racketeering operation? Is this Al Capone? 2 JP Morgan Chase bankers in Brooklyn indicted for stealing $400,000 from accounts of elderly or deceased. Florida woman, 94, wins $19 million fraud ruling against JP Morgan. Wow. JP Morgan found evidence employees and customers misused PPP funds and other stimulus programs. Surprise, surprise. JP Morgan employees caught thieving again. This time, it is PPP loans. And of course, JP Morgan says, we want to hire criminals, giving people with criminal backgrounds a second chance. No. You need criminals because this is a criminal organization. So this is your buddy, Joe. Al Capone. Here's my buddy Al. Let's hear his thoughts about the debt crisis. Back to the wall of worry. What about the Biden administration? We already talked about it. And then what about the V, the D, the C, whatever it is? And here's a disclaimer. I know you guys are sensitive. You've already been brainwashed. So here's my suggestion before we start talking here. Go find your safe space, maybe a coloring book, perhaps a few diapers, because you might feel a little uncomfortable here with another person, expressing their freedom of speech. God forbid somebody has a different opinion. And with that out of the way, let's move on to the market's coverage today. And here we go. The Dow Industrial Average closing in the green by 102.32 points, or a gain of 0.30%. The Nasdaq closing in the green by 68.08 points, or a gain of 0.47%. The S&P 500 closing in the green by 17.83 points, or a gain of 0.41%. Moving on to the sector's performance, leading the pack, number 1, can you guess? Utilities, capturing the gold medal. The number 2 for the silver, REITs. The number 3 for the bronze, technology. Meanwhile, the laggards of the day led by energy, healthcare, and materials. Again, on face value, the market rallied higher. Recovery day, rebound day, but the recovery was led by the defensive sectors of the market, utilities and REITs. Perhaps yields went down for a little while, but do we have a top in yields? The answer is no. So whatever rally this is, it's not going to last, at least in utilities and REITs, until the 10-year rate tops or at least cools off in a consolidation range. What about the advance to decline ratios? A market comeback, the rally, right? Well, for the NYSE, 35% advancing versus 63% declining. The Nasdaq 34% advancing versus 63% declining. What does that mean? It means that the majority of buying happened in the big cap technology names. The big caps went higher and acted as the tide that lifted all boats, and therefore the market in face value rallying higher. But the majority of the gains, the majority of the buying happened in the big cap technology names. And by the way, the majority of the buying also happened via call options, with the expiration date, you guessed it, this upcoming Friday. So we don't have a conviction here yet, but we're getting closer to a bottom. Moving on to futures. What's going on here? Of course, the story of the day, energy prices down across the board, a massive decline for natural gas, down 10%, and then we have crude oil, the WTI and Brent, down about 2% apiece. Even heating oil prices are down a little over 2%. This is, of course, a relief for consumers. We know the European consumer has been suffering for the last few weeks, namely in the United Kingdom. So nat gas prices going down is good for Europe, good for the consumer, good for tampering inflation expectations. The problem is it is an exercise of power from Russia over the European Union. It could morph into a political story if the Biden administration decides to respond, but for now, the Europeans will take whatever aid that comes out of Russia. And I believe that the Biden administration is also breathing a sigh of relief that energy prices will go down because for the American consumer, we are also dealing with prices, the highest gasoline prices in 7 years. And this is, of course, impacting the consumer sentiment and perhaps the political sentiment on who to blame for this inflation crisis. You and I know that it is the Fed, Jerome Powell, because inflation is always a monetary phenomenon. But the public doesn't know that, and they will blame the rise in energy prices on Biden. And therefore, for now, the US, the EU will take any aid from Russia. No complaints at all for now. And by the way, remember last year before the elections when I told you if Biden gets elected, you go all in energy. Energy prices will rise higher and the election of Joe Biden will be the best thing that ever happened to energy prices. Of course, the experts, quote unquote, said if Biden wins, we will see energy prices, energy stocks crashing like you have never seen before. And I said, no, it will be the best thing that ever happened to energy prices because the ESG policies from this administration will be extremely good for oil prices to rise higher. And I gave you Chevron as a pick. I gave you other picks. All of these picks work, with the exception of Brown-Forman. We have a problem here with bourbon prices because the tariff wars never ended. My bet was that the Biden administration will reverse the trade tariffs on bourbon. And this, of course, did not happen. And therefore, these distilleries are now facing a massive tax bill. What does that mean for us consumers? And I know what you're going to say, bro, I don't drink that kind of stuff. What are you drinking now, bitch? Prices will go higher because they're going to pay more taxes, more costs, more tariffs. That will mean higher bourbon prices. You know what else is rising higher? Coal prices, the highest prices in years. There was always going to be a price to pay here for the transformation from an oil-dependent economy to an ESG-dependent economy. The transition will be violent, and energy prices will rise significantly higher. Of course, we have propagandist Tom Friedman over at the New York Times. He says, don't blame the greenies for the rise in energy prices and how expensive this winter will be. Unless, of course, Vlad Putin saves the day. I'm sure Tom Friedman would love that, right? Vladimir Putin saved Christmas. Anyhow, back to the futures. What about softs? What's going on here? The rally in cotton futures goes on. Is it going to top? Perhaps. But until then, the rise in cotton futures will add pressure on apparel retailer stocks. We have rebounds here in coffee and OJ, meanwhile losses led by cocoa, lumber, and sugar. Moving on to metals, what's going on here? Muted action, we have gold, silver, copper, all pretty much on the flat line. Meanwhile, we have a rally in platinum, but declines of about 1% in palladium futures. The rally in platinum up about 3%. Why? Because Janet Yellen did the flip-flop from the $1 trillion coin as a gimmick. Now maybe we're going to need it, and therefore platinum prices went higher. What about meats? We have retreat for lean hogs futures, the new big tech. Meanwhile, we have modest gains here for feeder and live cattle futures, all rising higher. What about grains? We have declines led by soybean oil, corn, soybeans. Meanwhile, we have gains here led by rough rice, soybean meal, and oats futures. Wheat and canola on the flat line. Moving on to the big casino, the options market. What's going on here? Believe it or not, the market rebounded higher, but the action in the casino was pretty much muted. They're not bidding big here, which is a sign that options traders are waiting for clarity. They're waiting whether the market will trade higher or lower again, and then we will see the volume rising higher in the casino. But regardless, here we have it at number one, Apple, the hottest table with about 800,000 contracts, about 66% of those were calls. And at number two, Tesla, the souffle, with about 575,000 contracts, about 49% of those were calls. Watch out for the implied volatility in the souffle rising higher. We have Reverend Elon speaking tomorrow to his culties. Perhaps he will say something important. Perhaps he will announce something. Chimp with a chip in his brain who will drive your Tesla for you, and Tesla will evade problems with authorities for the false advertising of the full self-driving mode to full chimp self-driving mode. That's the new one, right? New tech, new innovation from Tesla. But always remember that Reverend Elon is a pathological liar. Whatever he says, always repeat, what about the robo-taxis, bro? For example, if Elon says, we will have chimps driving Teslas all the way to the moon, just say, what about the robo-taxis, bro? And here it is, number three, PLTR, Palantir, with about 436,000 contracts, about 75.5% of those were calls. Palantir was trading higher today, much higher, to the tune of about 10%, and then it flushed down, closing at the lows of the day. So the bears were jerking off in the morning, the futures, the Dow futures, and then by the end of the day, they got served the pie right in the face. And now we have the Palantir boys celebrating overnight the pre-market action. Palantir up 10, 12, 13%. And then by the end of the day, another pie right in the face. Sell the rep, bro. Anyhow, moving on to the unusual activities that took place in the options market today. Starting with the ticker IYR, this is the real estate ETF. They're betting for more declines to come here by buying the 98 puts for the expiration date October 29th. With expectations that the name will drop down by more than 6% by then. They paid about 60 cents apiece to enter this trade. All in all, spending about $900,000. What about the trade for the ticker AFRM, Affirm? Want to talk about the moon? Here comes the moon. Riding higher on a new deal announcement with Target, by the way. Buy now, pay later, or pay never. If a firm is operating in my neighborhood, it is give me the cash now and say goodbye. This is the business model of Affirm. But I told you before, this stock could increase its revenue by 5-fold. It actually could generate $10 billion a year from the collaboration with Amazon and Target alone. And therefore, goodbye PayPal, hello Affirm. Out with the old PayPal, goodbye, we dump that one and we buy Affirm. But the move has been excessive here, and the implied volatility is surging significantly higher. And therefore, if you are on the wrong side of the trade here, if you don't buy the stock, if you're trading calls and puts, if you are in the wrong side, you could get smoked fast. And therefore, we have a trade here, a smart one, and it is a strangle trade for all of you sadistic creeps. And the idea is, we're not sure about the direction of the pop. Is it going to happen higher, or are we going to see a flush down? But there is a massive move coming by the end of the week Friday, and therefore, using a strangle, they're buying the 145 calls, and they're also buying the 125 puts, both for the expiration date for this upcoming Friday, October 8th. They paid about $2 a piece for the 145 calls, and they paid about $1.80 for the puts, the 125s. All in all, spending about $5 million. So they have high conviction rate here. The stock will have an explosive move one way or the other in 2 days. Of course, on the other side of the trade, there's somebody that says, forget about it. I'm going to capture value from the implied volatility by selling out of the money calls and out of the money puts. Who's going to win here, the buyer or the seller? Let me know in the comments. What about AMC? By the way, I followed this trade. I put my ape suit on, my gorilla suit, I pounded my chest, and I bought AMC calls, exactly this trade that you see right in front of you. The 39 calls for the expiration date this upcoming Friday, October 8th, very mature from me, of course, trading like an ape. And of course, the expectations are that AMC will pop higher by more than 6.5% by then, and we paid about 50 cents a piece to enter this trade. All in all, spending about $600,000. What about the trade for the ticker TWTR, Twitter? The name was down yesterday or earlier in the week in sympathy with Facebook, which went down big. due to the whatever happens over there. But somebody's betting here that Twitter will gain advantage now that Facebook is the demon, and therefore they're buying calls, the 65 calls for the expiration date, October 22nd, with expectations that Twitter will rise higher by more than 6% or so by the expiration date. They paid about 85 cents apiece to enter this trade. All in all, spending about $800,000. What about the trade for the ticker LY? Li Auto. LI, excuse me. They're buying calls here, betting for a rebound. Perhaps the Biden-Xi call will be good for Chinese stocks. No delisting, we'll see. Is it time to buy Chinese stocks? Maybe. We're getting closer. Somebody's buying the $30 calls for Li for the expiration date, November 19th, with the expectations that the name will pop higher by more than 9.5% by then, and they paid about $1.20 apiece to enter this trade. All in all, spending about $1.2 million. What about the trade for the ticker NKTR? This is for Nektar Therapeutics. The name is down big today, but somebody's betting for a rebound by buying the 19 calls, the expiration date November 19th, with the expectations that the name will pop higher, rebound higher by more than 18% or so. They paid about $1 a piece to enter this trade. All in all, spending about $1 million. What about the trades for the ticker SPY for the S&P 500? This is an interesting one because we have a hybrid trade here. It is a calendar put, but it is also a spread, and therefore, you guessed it, we call it calendar spread. They are buying the SPY puts, the 380 puts for the expiration date, November 5th, and they paid about $1 a piece to enter this trade. At the same time, they sold the 390 puts, the expiration date, October 20th, and they collected about 35 cents apiece. How do we read this trade? What is the trader betting on? They're betting that perhaps the SPY will recover for a little while, perhaps consolidate all the way to the end of the month. But then the following month, November, we will see the market resuming with another leg down of about 10% or so. Lastly, what about the ticker EGHT? This is for 8x8, and they're betting for more gains to come for this name by buying the 25 calls for the expiration date, November 19th, with the expectations that the name will pop higher by more than 9% or so by then, and they paid about 90 cents apiece to enter this trade. All in all, spending about $850,000. Moving on to the heat map. What's going on here? We know what's going on with oil. Oil is down. Energy prices are down. Energy stocks are down. The dollar popping higher, at least in the morning. This is adding pressure on steel, metals, copper, but gold is rising higher, even though yields and the dollar went higher. So this is getting interesting. It's spicy. Get your Sherlock Holmes hat on because you're going to need it. Matter of fact, the inflation trade in general is underperforming. Financials, energy, industrials, and materials. What's overperforming is the northern side of the map, a weird combination between tech and the defensives, consumer defensives, REITs, and utilities. What is the message here? The message is we have market participants who are betting that the demise of energy prices, at least for now, will dampen inflation expectations, and therefore yields will start to cool down. If yields cool down, then you buy the big cap technology names, and therefore they're buying Microsoft, Amazon, Apple, Google, all catching a bid today. There's another side that says if yields go down, or at least cool down, I'm better off buying the defensives. REITs, utilities, consumer defensives, PepsiCo, Mondelez, Hershey's, Coca-Cola, because these names will benefit if yields cool down. In both cases, market participants are betting that yields are about to top. Extremely interesting here. Of course, the contrast between Merck and Moderna, the inverse relationship, also getting broken today. Both Moderna and Merck are down. But of course, the media says that the Wall Street bettors and the likes are now YOLOing Merck. I haven't seen any evidence of that, but perhaps. You tell me. You're the one YOLOing stocks, not me. We also have bad news when it comes to Moderna because Sweden and Denmark suspended the Moderna vaccine for younger age groups, under 30 in Sweden and under 18 in Denmark, because, quote-unquote, signals of increased risk of side effects such as inflammation of the heart muscle. And again, we know that Moderna is a little stronger than Pfizer. The dose is a little higher. And watch out here, because the public officials could actually reduce the recommendation for Moderna's vaccine to 1 dose. And if that happens, it's not going to be good for the stock. And therefore, I remain short Moderna, long Merck. Moving on to charts, starting with the 30 minutes chart for the SPY. What's going on here? Again, all eyes on the potential for reverse head and shoulder formation. If it happens, we have a bottom. Of course, the confirmation will be closing above 438. Now, we've been fooled before here, folks. You'll remember back when we had the other reverse head and shoulder formation, which did not break out to the upside. Matter of fact, it got broken. And therefore, even though the technicals are starting to look good, I remain skeptical until and unless I have a top in the dollar and yields. Absent of that, forget about it. What about the daily chart for the continuous contract, the SPY? Very good looking candle here, and the momentum indicators are curling up higher, indicating that this is a bottoming process. What does that mean? It means that the market is parking here, going back and forth in consolidation, back and forth, asking market participants, do we have dip buyers at this price? Is it good enough or not? And at least today, we had market participants buying the dip and saying, yes, it is a good price. But they bought big cap technology stocks and they bought utilities and REITs. I'm not so impressed by that. Now, if dip buyers don't follow up on the action we got today by buying the dip again, then the market will continue to ask, do we have dip buyers? Do we have dip buyers? If the dip buyers don't follow up, the market will take another leg down, perhaps a better price, and it will start asking again, do we have buyers? Do we have dip buyers? Until we get to a point where we have high conviction from market participants that this is the bottom, and we see massive buying, a surge in volume, which is, by the way, we're starting to see that. The majority of the net increase in volume came from buying, meaning we have legitimate buying here. And therefore, I say we're getting closer to a bottom. The problem is, I'm not going to confirm that until the dollar and yields cool down. I'm not even saying go down. I'm saying cool down. Moving on to the Qs. What's going on here? The obvious. The reverse head and shoulder formation, will it play out? We will know if the Qs closes above 360.5. Then you have the bottom, and you confirm with the volume, the action in yields, and the Dixie. If all clear, then indeed this is the bottom. The support remains 352, the resistance at 360.5. What about the daily chart for the continuous contract and the Nasdaq? Again, the volume is rising higher. On an up day, this is a good sign that we are extremely close to a bottom. The candle is good looking, and the momentum indicators, the MACD and the RSI, all curling higher. We are seeing the red columns in the histogram of the MACD getting shorter and shorter and shorter. All of these are good signs. The real confirmation is closing above 15,000 for the week. Can it happen? Will it happen? It certainly could. We will confirm that by a top in the dollar and yields. And here it is, the weekly chart for the NDX, the big Nasdaq, right down to the target, the trend line. Top to bottom, about 9% correction now, and the market rebounded higher. All of these are good signs, pointing that perhaps we're getting closer or we are at a bottom. Here's a chart for the IWM. 30 minutes for the Russell 2000. So far, we talked about the good. Let's talk about the bad. The IWM is down, the so-called leading indicator. I don't believe in that garbage. Of course, I know that the cyclicals, the inflation trade was down, and therefore, the IWM is underperforming. It has broken the triangle to the downside, catching the support at 218 and closing at the highs of the day. Is this bad or good? It is neutral. After all, closing in the red is not a good thing, but closing at the highs of the day is an important sign. Of course, the destination of the chart depends on what the dollar and yields are about to do, because the dollar and yields are dictating the direction of the rotation trade, from inflation to disinflation, from cyclicals to tech, from reopening to stay at home. And here is the chart for the dollar index, the Dixie. What's going on here? Perhaps we're seeing the ABC pattern happening, and the dollar is about to rise higher, all the way to 94.7 at a minimum. If we have a deal regarding the debt ceiling and the budget, then you will see the dollar pulling back. And here it is, the chart of gold. What's going on here? I am becoming less skeptical here. I had a vision last night. I was dreaming, and I saw the back of a man in a jewelry store. And then he turned around facing me, and he said, buy gold. Gold will go higher. And it is, of course, Peter Schiff. But all joking aside, I am seeing resiliency here, because as the dollar and yields pop higher, we expect gold to underperform. But gold is holding at the Fibonacci support over and over and over again. This is a good sign, so I am giving gold the bull flag, which means gold goes higher. Now that I said that, watch how gold prices are going to crash tomorrow. But anyways, moving on to the 10-year yield, what's going on here? We were looking for an ABC pattern, and it appears so far that the ABC pattern is underway, and yields are about to pop higher to about 1.6, 1.65, and the high estimate at 1.7. And again, to solve the mystery of the market, you gotta have conviction about this chart. Is it about to pop higher again? Or is it about to cool down? Cooling down is good for the market, specifically the big cap technology stocks. Moving on to the TLT weekly chart. What's going on here? We have a confirmation, at least for now, the MACD and the RSI indicators, that we have lost momentum in the TLT. The problem is the week is not over yet, meaning that whatever impression you see in the MACD indicator on the weekly is not done yet. We are not through with the week yet, and therefore there is time for the TLT to do some repair. Perhaps climbing all the way to 149 could happen. What about the VIX? 4 hours chart, what's going on here? We're looking at the MACD. It is reading red for now, but it is still confusing. The VIX remains within range, consolidating over and over and over again within a very defined range. I say 20 for support, 25 for resistance. Breaking below 20, you know it's over. SPY has a bottom, and we move higher. The VIX popping higher above 25, you know that the pain is not over yet. We don't have buyers. Remember, any buyers, any dip buyers, no buyers? Okay, let's go down. So for now, we don't have a defined crossing in the MACD one way or the other. It is reading red, but these columns better get bigger and taller. What about Apple? What's going on here? Daily chart? Rebounding higher, closing above the previous 2 days' highs. This is a good sign. It didn't go all the way to the target, but it could go back in another leg down. For all you know, this is a dead cat bounce and Apple goes down again. All depends on the dollar and yields. For now, we have an imminent crossing in the MACD indicator on the daily and therefore changing momentum from negative to positive. This is a good sign. Apple is the market is Apple. From a technical perspective, we're getting closer to our bottom here, but will it be a dead cat bounce or a legitimate bottom? That depends on the confirmation from the dollar and yields. Moving on to Tesla, the souffle. What's going on here from a 30 minutes perspective? Still consolidating, hugging the resistance/support line of 781, 782, 781 and a half. Doesn't matter to me. It is within that range. The bulls are waiting for Reverend Elon. The bears are also waiting for Reverend Elon. And of course, the most important thing to hear and listen for is what Elon is about to say regarding the chip shortage. We know it's getting worse. Prices are rising higher. Every other company is suffering right now. We know from the inventory numbers that Tesla is running low on supplies. If the Rev slips, for example, and says, you know what? Yeah, the chip shortage is going to hit us. It's getting worse out there, and Biden did this and Biden did that. His attempt to twist it for Biden fires back and twists against the stock. Because, wait a minute here, perhaps we have peak deliveries in Tesla numbers, and the chip shortage will hit the company next. Moving on to tulips, BTC, what's going on here? Popping higher, a massive pop higher, and now we're getting at the resistance of 55,300. The move will become overbought quickly. Look at the RSI, for example, surging higher. This is a vertical move higher. What happens if we have a bottom in the market and money comes out of cryptos chasing stocks again? Could this be a quick rally that lasted a few days, pump and dump? Certainly could, but for now, from a technical perspective, all of my conditions were met for tulips to rally. And indeed, they're rallying. And so far, the technicals remain positive, indicating that the wave is still going. My skepticism is still here that this is a phony move. A phony pop higher from Elon because we have a coin named after Elon's dog surging over 2,000%. So the sentiment in stocks got sour, but the sentiment in tulips continue to be sky high. The hyper bullishness in cryptos. Moving on to AMC. What's going on here in A-Plan? The bull flag is still here, and it could play any minute now, and therefore I bought calls. We'll see what happens, but my bet is that AMC will pop higher for now on the daily, but the weekly remains bad. The weekly is still indicating that AMC will drop down, so whatever pop we get here, it will be transitory. That doesn't mean you cannot make money from trading it. Moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have the weekly jobless claims, and all eyes will be on that number because all eyes are really on the Friday's payroll report number. We have leading indicators in the ADP and the weekly claims. The ADP is suggesting a beat when expectations comes Friday. What will the weekly jobless claims say? Because all eyes on employment and the threshold for substantial further progress for the Fed to start tapering. And with that, ladies and gentlemen, I'm done here. Thank you for watching. Thank you for listening. This is all I got for you for now, but I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.